And so thank you everybody for joining us today for today's session hosted by Presti Naegele. And specifically, we have Sal Russo. He's one of the partners over there at Presti Naegele. I'll introduce him here in a second. But before we do that, we'll need to go ahead and take care of some housekeeping items. So today's webinar is hosted by zoho.com/CPA. So that's the Zoho team over here that you kind of hear in the background. And we welcome accountants and bookkeepers. And really, if you're looking to become a Zoho partner, go ahead and head on over to that website. And if you're looking for an accountant or bookkeeper, go there as well. And to explain kind of what the Showtime app looks like, if you look at the left-hand side, you can see the questions panel. That's where you'll propose any questions for Sal or myself throughout the webinar. And also we have the handouts at the bottom. I included some helpful links such as Presti Naegele's page, and also some helpful links from SBA. And I included the presentation as well. You can also see the chat section at the bottom, on the left-hand side as well. That's where you can kind of tell us that you can't hear us, or if you want to give us any pointers or anything like that. Today's session does qualify for 1 CPE credit. In order to receive this CPE, you need to attend for at least 15 minutes and answer 3 out of the 4 polling questions. And just to show you what a polling question looks like, I'm going to just launch one real quick. This is just kind of what one looks like right now. It'll just pop up on your screen, and you'll be able to answer it throughout the session. And also, if you miss a polling question, you can click on the polls tab and answer any questions that you missed. And you need to answer 3 out of the 4.
Sorry, Anthony, these polling questions are not used for marketing purposes. These are really up there for accountants who are attending this event who need their continuing professional education credit or CPE, like Nathan mentioned. So we're not, there's no subversive reason for having these questions here. We're just fulfilling CPE requirements.
Yeah, thanks for that, Val. And also, if you would like to receive a CPE credit, we ask that you fill out the evaluation. You actually have to fill out the evaluation. That's how we keep track of everyone who needs to receive a CPE. And if you don't need to receive a CPE, we ask that you fill out the evaluation at the end as well. Now, to introduce the Zoho team, Talib Bakar, he's actually not here today. He had a family emergency, so he might be joining later, but he'll just be in the background. We have Val Steed, our resident CPA, and you've been hearing him kind of throughout the session. I'll let him introduce himself.
Yes. Good day, everyone. Thanks for being here. We really are thrilled to do these kind of events. My background is I am a CPA background, but mostly accounting technology for many, many years. Joined Zoho a few years back to help work on this accountants program. For many years, I actually was a consultant to Intuit with their Pro Advisor program. So I'm very familiar with what we're trying to do here. As an offshoot, we decided as a group to do also these webcasts on different various topics. So that's a little bit about me and our background and our group. And let me just say one last thing here. You might be thinking, why on earth would a marketing group at Zoho be doing events on PPP? Well, we decided way last spring that was going to be our project to help the public, that we were going to dive deep into this thing. And we're very, very grateful today to have Sal joining us, Sal Russo from Presti Naegele, being an expert in this area. So we're thrilled about this.
Yeah, thank you, Val. And my name is Nathan Rogerson, and I'm a marketing manager over here at Zoho, and I help put together these webinars and also put out some marketing material for Zoho Finance. Kind of what I mentioned earlier, today is hosted by zoho.com/CPA. And if you're an accountant or a CPA, please head on over to that page and check us out and come talk to us. And all you have to do is just click Become an Advisor, and you can talk to me or Tala or Val. So without further ado, let's get started. And one of our partners, Presti Naegele, is here today, Sal Russo. And I'll let him kind of introduce himself. He's already done like three webinars with us, and he's done great so far and has great chemistry with the audience. Sal, how's it going?
Good, going great. Thanks, Nathan. Thanks, Zoho team, for having us on. From the Presti Naegele team, we have myself, of course, Sal Russo, as Nathan mentioned. I'm a partner with Presti Naegele. I also have from my team, from the Presti Naegele team, Josh Blesnick. Josh is one of our accounting technology consultants. He is an expert in Zoho, and he helps a lot of our accounting clients with their accounting technology needs. And that includes setting up books and records and accounting software, designing accounting cycles and systems. And, that's one thing about our firm. We're very technology based. Accounting and technology goes hand in hand, especially in today's world, especially in the cloud climate we're living in now with COVID. So this has shown us how important technology is more than ever before. That's a big part of what we do and how we help our clients. And of course, on the tax side of things, on the accounting side, we do help our clients with bookkeeping services and tax planning and compliance services. So we take a very hands-on approach with our clients. We are based in New York City, but we have clients across the country and some clients that are located internationally. There's really no border limits with us in helping our clients. And so we'll help you from the ground up, basically to help determine what kind of legal entity you might want to form and just getting your business set up the right way the first time. With that, we have a lot to cover today in today's session. I want to jump right into it. So the new stimulus bill, we've been waiting a long time for this. It finally passed in late December. Thankfully, it's got a lot of good things in there for small business owners like yourselves. A couple of good provisions for individuals as well. And we want to hit the main items on this. Obviously, the star of the show here is the PPP Round 2. If our listeners today have not applied for a PPP Round 2, I strongly encourage you to do that after today's session. I'm going to go through a lot of good info here on what to look out for and what to do with the application and how to get it done, and a lot of the rules that are involved there. And as you can see, there's a ton of other goodies in there. A popular, I should say a not so popular provision that people are starting to hear about now is the employee retention credit. And I want to hit on that. I want to spend a good chunk of time today talking about that. I get the sense not a lot of people know about it. It's a very valuable thing. Strategically, we'll see how it works with the PPP and how you should work around that. Now, these slides have a lot of detailed information, as you guys will see as we go through. I'm not going to touch on every single line item. I just packed a lot of info here. I want you guys to leave today's session with as much information on paper as possible. And, feel free to reach out to me after today's session with any detailed questions on your particular circumstance.
Awesome. So I'll go ahead and continue on. So what's, whenever you're looking at the PPP, I really don't want to take up too much time, but that $284 billion, I guess you'll dive into it a little later, and it's pretty interesting how they break it up. And let's just kind of get into that.
Yeah. So there's a lot of money out there, and it is on a first come, first served basis. So strongly urge you guys to apply through your bank or perhaps through an online lender. There are a lot of them out there. We're helping clients apply for that. We're preparing applications for our clients with either their bank that they've been doing business with forever or with an online lender, and there's plenty of them out there. If you simply Google, PPP lender, you'll have a lot to choose from. But obviously, if you do have a relationship with your bank, I urge you to go through your bank, especially if you applied with them for your first round. It's a lot easier of a process. With that, if you apply through Chase, go back to Chase. They have all your information. If you apply through PayPal, do the same. Now, one big rule change for the second round, and this is only for the second round. As you see, it says new. Anything that's new, by the way, I put new in big, bold, big letters there. To be able to qualify for the second round, you have to show a 25% reduction in gross receipts for any quarter in 2020 as compared to the same quarter in 2019. Now, for a lot of businesses, that's the second quarter. That's when the shutdowns started happening. That's when COVID really hit hard. Different parts of the country, you might see different things happening. Certainly in the Northeast, that's the second quarter for us. I'm seeing with different clients scattered across the country that, they have different valleys and peaks. And of course, it depends what industry you're in. Some of my clients, I'm seeing the fourth quarter be the biggest drop just because they had such a huge fourth quarter of 2019. So you really have to dig into your records there and check out where you qualify. Gross receipts are determined as or defined as what you report on your tax return. So you're going to want to look there and see if you're reporting on the accrual basis or on a cash basis. That matters. So you're going to have to dive into those details. And similar to the first round, almost all borrowers will be eligible to receive that 2.5 times the average. We all know about the hospitality industry, which I'll cover in the next slide. And at the bottom there, you'll see that you can actually now use either 2019 or 2020 or any 12-week period if you're a seasonal employer. Be careful with the seasonal employer. There's a couple of requirements you have to fulfill. Again, a lot of details there. All the information is available at the SBA's website. But obviously, like I said earlier, if you have any questions, you can always reach out to me or our firm. We're helping people with this, navigate this. And then obviously, receipt of an initial PPP loan doesn't disqualify you from getting a second round.
Yeah. And whenever you say you may now use your calendar year 2019, 2020 for any 12-week period, you're talking about to calculate your payroll, correct?
Yes. Yeah, that's to determine the basis of the loan that you're looking at your payroll for that.
Yeah. Awesome.
Yeah. And not just payroll, obviously payroll costs.
Yeah. Payroll costs. Yes.
Which anyone who's gone through the first round might be familiar with the fact that it includes not only wages and salaries, but also employee retirement benefits, health benefits, and some other things. So looking at this slide here, continuing with the second round, at the top, there's your hospitality industry provision. Big bonus, you can qualify for 3.5 times your average monthly payroll expenses. And that's for any NAICS code starting with 72. That's the whole accommodation and food service industries. Couple of other requirements there. Most of them don't apply to a lot of people, so I wouldn't be too worried about that. But of course, you want to make sure you check all the boxes. And in addition another change for the second round is that you're able to qualify your loan forgiveness with a couple of extra categories. You can see there in my fifth bullet point down, you'll see the in bold it says but adds certain operation expenses, property damage costs, supplier costs, and worker protection costs. So that's your personal protection equipment, masks, gloves, etc. So a lot easier to qualify for forgiveness in the second round. That applies to the first round too, by the way, which we'll get into on the forgiveness slide. But they're really making it a lot easier for people to basically consider this free money. So at the bottom there, I just wanted to add a dedicated bullet point for self-employed individuals or no employees. A lot of you participants today out there just might simply be a self-employed individual operating a consulting practice, or you might have a small business that you're basically running on your own. Just wanted to list that bullet point for you personally speaking, that the max loan is still about $20,000, and you can use your 2019 or your 2020 Schedule C. Obviously, you want to choose the one that's the higher of the two. And if your 2020 Schedule C is not prepared yet, you can submit an estimate. But just be careful upon reconciliation. If it's determined that you got more money than you should have, obviously you're going to either have to, you're going to have to pay that back, of course. And a big thing that I've seen missed is that a lot of partners and partnerships, they don't include themselves in the loan calculation. You're going to want to be careful of that. And look, the best provision out of this stimulus bill, the loan is not taxable. It's basically free money, which is alleviates a big burden for small business owners out there that are receiving this PPP. So that's just like the icing on the cake here. So we'll jump to the next slide.
Yeah. So I'm going to go ahead and launch the first polling question. And I saw previously that some people are having difficulty seeing the poll question. Let me know if you can see it in the chat section. Well, actually, I see people answering it. And really, Sal, I'm just asking everybody, what industry are they in? And
I'm gonna try and hit some of these questions that people are
yeah,
submitting.
awesome. Appreciate it.
Sure.
Are you seeing a lot of people apply for this second round, Sal?
Yeah. You know what? The 25% requirement is kicking out a few people. And that's good to see. That means their businesses haven't suffered as much as they thought they would, I guess. But yeah, there's a lot of people applying. I mean, especially in the self-employed industries. You know, people are really trying to grab this money as fast as they can.
Yeah,
Right.
awesome.
I've seen a lot of. I had a lot of friends and people around our area talk to me. One of my buddies, they have a company that's really been struggling through this whole thing, and the second round they're not going to qualify because they have 325 employees. They're barely over the limit.
Oh boy, yeah, that's disappointing.
Just how it goes. It's just life.
I do see a question from Kelvin, and I'll just project it.
Kelvin, I was actually just typing a response to it. So Kelvin, Kelvin asked, how does the bank determine salary for self-employed with no employees? Basically, they look at the net income from your Schedule C, and they cap that at $100,000. That's the basis for the loan. That's what they use. So 2.5 times. If you looked at 100,000, you divide it by 12, multiply it by 2.5 times, that brings you to the $20,833 number, and that's your loan amount there. Obviously, if your net income from your Schedule C is less than 100,000, you'd simply do the same math. Divide that by 12, multiply it times 2.5, and then you have your loan amount. Unless, of course, you're in the hospitality industry. Then you'll use a 3.5 multiplier. And there's a lot of things there. It's not just are you a restaurant, are you a hotel? In that listing of those codes, you're going to find some consultants that work in that area. Like if you're I have a client who's a wine consultant. He helps restaurants and hotels buy wine, determine which wines to buy. So he qualifies under that because he's in that he operates in that world.
Awesome, thanks for that, Sal.
Sure. If a business broke even in 2019, can I still qualify for the PPP loan? No. If you're self-employed and that's what you mean, and you broke even, no, because they're going to base your loan amount on your self-employment income there. So if your self-employment income is zero, your loan amount is zero. So you might want to look at maybe 2020 to see if there's any dollars there that you can base that on. Now, however, if you have employees and you broke even, your loan is based upon your salaries that you pay. So that's a little different. Allison asked that question. So Allison, maybe we could talk about your specific, she added some more details. Business and mobile bartending serves. Okay, yeah, same applies. We could talk about more details about your specific business. And if you have any employees, you could submit an application there. I'm just going to jump into the next slide because I do have a lot of things to cover, and I'll get back to these questions as fast as I can.
Yeah, we'll try to save some time for Q&A at the end for sure.
Awesome. Okay. So in addition to opening the PPP up for the second round, they also reopened the first round. So anybody that didn't get a chance to apply in the first round, you can come back and reapply under the first round rules. Now, big thing to know is I mentioned it before, there's no 25% reduction test for the first round. Again, same rules, 2.5 times average monthly payroll. The hospitality provision applies for first rounders. And same thing with the payroll cost period to use for the basis of the loan. You can use 2019 calendar year, 2020, or any 12-week period if you're a seasonal employer. So you're going to want to take a look at this. So if you did not get a first-time loan, you can get a first-time loan. And just a little bit on timing, you notice that the application deadline is March 31st. One of the provisions for getting a second loan is that you have to spend the first round money. It's possible with the calendar, the way this works out, that you can get a loan, get funded, let's just say today, January 28th, get an 8-week forgiveness period, and then rush and get a second application in for the second round, let's just say March 28th. I don't know if the dates work out correctly. So if people haven't applied for the first round, and I don't know many people who haven't applied.
Yeah.
Any client that qualified for the first round that I spoke to, they applied. We made sure they applied. But if you fall into that category, you could technically, you might be able to double dip, as they say, and get 2 loans in a span of 2 months.
Yeah.
So,
And definitely with those new tax exempt, how you can put it towards more expenses, I think it's possible to spend the 2.5 in 8 weeks for sure.
I think so. Yeah, I think so. Yep. So we'll get to the next slide, Nathan.
Okay.
Thanks. All right. Loan forgiveness. So first of all, before I even dive into this, anyone that hasn't submitted their loan application, loan forgiveness application, hold on to that for a little while. Don't submit the forgiveness just yet. And just so you're aware, I say that with the knowledge that, qualifying for the second round doesn't mean you have to get your loan forgiven, the first round forgiven. You just have to spend the money. So everybody spent the first round money if you got the loan back in, July or earlier. So, with this, what's going on is we're still waiting on the streamlined forgiveness process for loans under $150,000. It's out there, it's available. A lot of banks have stopped accepting PPP forgiveness applications at this time. They've paused because although that the streamlined forgiveness is available and it's out there, a lot of banks don't have their paperwork, their process firmed up just yet. So they're kind of telling their customers, hey, look, let's just hit the pause button. We're busy with second rounds. We're waiting for some more guidance from the SBA. Let's just sort of hit the pause button. So I would say to you, if you haven't submitted the forgiveness app, just sit tight for now. And if you did want to submit the forgiveness app, let's just say, for example, your loan was $50,000 or less, that first bullet point up there, you could use the 3508S. It's just that the streamlined forgiveness is going to allow you to not have to deal with disclosing employee reductions, salaries, headcounts. That there's a lot of time involved in calculating that. We've been through that with clients. I'd rather not spend a few hours preparing that form for a client and charging them if at the end of this process they're going to simply have to check a box, sign the bottom of the form, and they're done. Why spend the professional time and why waste your time if we don't have to right now? And there's no benefit to jumping on it. So I would wait on that. So we can go to the next slide, Nathan. Thanks. Okay, we're here. This is one of my favorite parts of the presentation today. I know
a lot of people don't know about this, and I'm glad you put it in here, Sal.
Yeah. So I want to spend a good amount of time here. So guys, this is what's called the Employee Retention Credit. This was really not well known over the summer. Didn't really apply to a lot of people. This is a credit whereby if you retain your employees throughout the shutdowns and throughout the pandemic, you receive a federal credit for the wages you paid your employees. So not the payroll taxes you paid, the wages itself. It's a very valuable credit. The big problem with this credit over the summer and the fall, and before the stimulus bill was passed in December, was that anybody that received the PPP loan was ineligible for the ERC. Now this stimulus bill has changed that. They've opened the floodgates. A little bit of strategy that I'm going to get into here. But basically, this credit allows you to, for example, there's some caps here, and this credit is retroactive to 2020. So the bottom line is this: basically, if you applied for a PPP over the summer and you got it, and it meant you were disqualified from this credit, now they've rescinded that disqualification clause. Any wages that you received the PPP loan for, you can use, okay, to qualify for the ERC. However, if you're using any of those wages to qualify for forgiveness, you can't use that for the ERC. So just to explain this, you have two buckets here, right? You have a bucket of payroll costs that you're going to use to qualify for your loan forgiveness for PPP, and you have another bucket of payroll costs that you're going to use to get the ERC. You want to be real careful now. The PPP allows you to put a lot of different costs, categories of costs into that bucket. You've got wages, you've got health insurance, you've got retirement benefits, a lot of stuff in here, personal protection equipment, everything, rent, okay? This bucket, a little more tighter on the categories we put into here. It's just wages. So the PPP, 60% of the loans got to be used for wages. Let's keep it at 60. Don't bring it up to 70. Keep it at 60. The other 40%, you're gonna use those other categories we talked about. So this way, the other basket of wages, right? You use 60% of wages for PPP. You're going to use your other 40% of wages to qualify for this ERC credit. And it could work out mathematically where all of the costs you've been spending in these buckets qualify for something. This is why I'm telling clients, pause on those forgiveness applications. Once you put those forgiveness applications in and you say, yeah, I'm going to use 100% of my wages, I'm not going to worry about calculating my rent and all that other stuff, I'm not going to waste my time, you've now lost your opportunity to get the ERC. So we want to be able to get you as much of this money as possible. So it's very technical. Now that I've talked about the strategy of balancing the PPP costs and this ERC cost, let's get into the nitty gritty. Imagine you didn't get a PPP and this was the only thing you were looking for. All right. So first thing, like I said, in my second main bullet point, it's retroactive to 2020. So now you can go back to 2020, calculate, go through that process I just laid out, and I hope everybody understood it. And if not, I can go through it again. But you want to go back to 2020. You want to analyze that and go through that process. And now you want to go back and go ahead and amend federal quarterly payroll tax returns, Form 941, where you can claim this credit. And this credit is a credit you want to claim on your 941 form. It is a refundable credit, okay? And the credits are different whether you're applying for this credit for 2020 wages or 2021 wages. So for the 2020 credit, let's talk about the eligibility. First of all, your business must have been suspended fully or partially due to government-ordered COVID shutdowns. That's very specific. Shutting down under a government order, it's very specific. I find most people are just going to qualify under the second provision, which is had a quarter-to-quarter gross receipts reduction of 50% when comparing the same quarter to 2019. Now, you might qualify under that as well. You'd have to look at your specific circumstances to see if you do. Going to the calculation, assuming you do qualify, you're going to get a credit for 50% of the qualified wages paid to the employee from March through the end of December. And those qualified wages are limited to $10,000 per employee for the calendar year. So basically, the maximum credit you can get for any one employee is $5,000. So you can see the dollars could add up very quickly. Now, those of you who are self-employed with no employees, this doesn't apply to you. And I apologize, I should have said that up front. You do have to have employees on payroll for this to apply. Technically speaking, if you had a spouse or a family member on payroll, that would qualify. I haven't seen anything that kicks that out, but just so you know. And people that are thinking about hiring people now as we're coming into 2021, let's dive into the 2021 credit. And same provisions, right? You either had to have your operations suspended fully or partially due to the government order COVID shutdowns, or you had a quarter-to-quarter gross receipts reduction of 20%. They've relaxed the rules for 2021 eligibility. So if 2020 eligibility doesn't fit you, 2021 could. It's only a 20% drop, which is wonderful because it's less than the 2020. It's less than the 25% drop we see with the PPP second round. So if you qualify for a second round PPP, you'll qualify for a 2021 credit with the ERC, which again, I go back to the calculation and balancing act between the PPP and the ERC. It's just starting to sound like a nursery rhyme here, but that's a great thing. And the calculation, you're going to love this even more. They've raised the qualified wage percentage that for the credit from 50% to 70%. So now the qualified wages are still limited to $10,000 per employee, but now you get a max credit of $14,000 per employee, and that covers 2 quarters. All right, so it's $7,000 per quarter. So I'm just going to walk through this once more. The calculation for the 2021 credit: you paid your employee $10,000, right? You get a 70% credit in that quarter for that $10,000 employee in that quarter. You paid them $10,000 for the quarter. Let's say they're on payroll for $40,000 a year. You paid them $10,000 for that quarter. You get a $7,000 credit. All right. You paid them $10,000 again in the second quarter of 2021. You get another $7,000 credit. You just got $14,000 for that one employee. And you do the math, and this exponentially could be very valuable. For all of you that use a PEO, a professional employer organization, if you're dealing with them, you'll have to discuss claiming the credit with your rep. Obviously, they're filing 941s, and they're including you in this employer group. So you'll have to talk to them exactly to discuss the logistics of how to get this credit in your pocket. You can get it. It's still your money. So discuss the details with them. And obviously, if you're preparing your own returns, or if you're using some sort of a do-it-yourself payroll solution, like for example Zoho or some kind of other platform, that's something that you would basically have to deal with on your own, of course, with the help of your CPA. And we're helping clients with this credit as well. So if you don't have anyone advising on the specific credit, you can reach out to our firm, and we'll give you a hand with this. But again, I can't say enough. I'm excited about this. Our firm's really excited. To me, this is sort of living in the PPP 2.0's shadow right now. But I get the feeling once we get past the PPP round 2 madness that's happening right now, once things calm down and settle down, I think people are going to be looking at this big time. And this is not first come, first serve. So, if you wait until February to deal with this, or March, for 2020, certainly, and then for 2021, you deal with this in April when your 941s are due, when your quarterly payroll tax returns are due on April 30th. That's the time to deal with this. You don't want to let this go. Don't ignore this. This is huge.
Yeah, for sure. And this is definitely something that will require an Excel spreadsheet. I'll tell you that right now.
Oh, yeah.
Hey, Sal, I'm going to launch the second poll question.
Sure.
And what's interesting about this ERC is I really haven't seen too many people mention this. If you go to YouTube and everything, everyone's going for the hot topic for PPP round 2, and not a lot of people are talking about this ERC. And I didn't even know about if you applied for the application. I guess it makes sense if you did 100% of your payroll expenses for the PPP. How you were saying people just say, forget about it, I'll just do the 100%. That's very interesting.
Yeah. And
because it's so easy, because you can easily spend obviously 2.5 times your payroll in 24 weeks on 100% of payroll. So payroll costs.
Oh yeah, certainly. That's why we've been telling clients to pause on the forgiveness application since November. I think that November this stimulus bill got some real traction, and it was certainly being tossed around. The taxability of the PPP was a big thing that was up in the air for a long time. We were actually preparing year-end projections based upon the PPP being taxable, and then of course at the 11th hour, this was like a Christmas present. We actually had to go back and rework projections for our clients, which they were thrilled about, right?
For sure.
Take a little more professional time, but they were thrilled about that. The fact that it was not taxable. But definitely, Nathan, you hit it on the head. I mean, this is going to be the next big thing people are going to be talking about over the next month or two.
And like y'all have said, and I think the last webinar y'all had with us, you were mentioning that, hey, just don't stress out, hold off on the applications. I remember that y'all made that very clear, that you shouldn't just rush into the application process just because the Congress themselves didn't even know what they were going to do, and IRS was coming back and battling them, and it ended up okay for small businesses in the end, for sure.
Yeah. I had one client who really needed to get their forgiveness application in because they needed to get that loan off their balance sheet to qualify for financing. That was really the only one case where, he kind of said, look, I got to get through this financing round, so I can't do anything about it. I don't care what happens after this. So, he did what he had to do. But aside from that, I can't see why anyone else would want to, do the forgiveness if there's no benefit to it. So anyway, there's a ton of questions here in the queue. I'm definitely going to get to all these. I want to make my way through my slides. I just have a few more, and then we'll get into some questions. One of the other provisions here in the stimulus bill was the reopening of the EIDL loan, as they call it. It's the SBA Economic Injury Disaster Loan. It's been reopened. It's not a second round. All right, just to be clear. This is still the initial loan. The maximum loan amount is $150,000. There's no forgiveness. It's a true loan, although the interest rate is pretty cheap, 3.75%. That's pretty good. It's a 30-year amortization. Payments are suspended for a year from the day you get the money. The interest does continue to accrue, but allows you for a little bit of a cash flow cushion there. And it's pretty simple to apply. You don't go through a bank or through another lender. You go straight to the SBA. The application process is pretty quick. It's pretty simple. There was this advance of $10,000 for $1,000 per employee, capped at 10 grand that they had, which went pretty quickly in the initial offering of this loan. But now this time around, they're only offering that to applicants in low-income communities. They talk about what those locations are at the SBA website. So that's something you can look at if you qualify under that requirement. But if not, if you're just looking for a quick way of getting some financing at a cheap interest rate, and obviously you didn't receive this, in June or May when this program was open initially, this is a nice place to go to. Obviously, you want to do your PPP 2.0 first, and then if you need additional financing, go to this, because obviously this is a non-forgivable loan.
Awesome. I have that link in the handouts as well, just so everybody knows.
Thanks, Nathan. So this is another big thing. I would say this is probably the third big thing to come out of this stimulus bill behind the PPP and the ERC. We have the Shuttered Venue Operators Grant, SVO. This program is really for anyone or any business that is involved in theatrical productions, television, motion pictures. If you're an agent or a consultant, a representative of people that are in those industries, this is for you. The program's not open yet. There's information on the SBA website on this. I've got clients in this area. I've got clients that are producing Broadway shows, and obviously it's been a devastating time for them. Motion pictures, people in this industry have suffered greatly. And I've got some clients in that industry, like I mentioned. So we're kind of sitting here waiting until this program opens. Now, one thing to know is that you're not qualified to apply for this loan, for this grant. It is a grant, it's not a loan. You're not qualified to apply for this grant if you receive the PPP loan after December 27, 2020. So what that means is if you are applying for the PPP 2.0, you're disqualified from getting this loan. Now, you could wait around and because you might get more money out of this. You could wait around and wait for this program to open and then apply there. So some more strategy here. I know the strategy is not fun to go through, but there's a good payoff at the end of it. But basically, just to profile this program, they've allocated $15 billion in grants to the shuttered venues. Eligible applicants, you can see there, they can get a grant equal to 45% of their gross revenue. Gross. That's huge. So the max amount is $10 million to to any, to any one applicant. And, $2 billion of that is reserved for eligible applicants with 50 full-time employees. Now, here's the thing. You got to demonstrate a 25% revenue loss between April and December 2020. So that's comparing year to year. And so you got to fill that requirement. And then there's priority for businesses hit the hardest. With the PPP, there was this sense that some businesses that really didn't need it, that maybe fit the parameters or the requirements, just by chance, they got the money, and other businesses were left out in the cold, and their applications were sort of tossed on the cutting room floor. With this is going to target the businesses that have been hit hardest the most. First 14 days, and I didn't put this up on the slide, but on the SBA website, they talk about the first 14 days of the program opening. They're only going to allow people with, I believe it was a 75% reduction in revenue. So they're letting the worst in first. Let's put it that way. Mm-hmm. Eligible entities include, you can see the list there. It's anybody that's in the Broadway industry, productions, TVs, movie industry. You must have been in operation as of February of 2020. You can see that there. And like I said, guys, I included the link there. I urge you to go to the SBA website if this applies to you, and sort of keep an eye on that. Like I mentioned with the strategy, you're going to want to see how much you stand to gain from the PPP 2.0, and then measure that against what you stand to gain here. And I would imagine more people would stand to gain more money here, because this is based off of revenue, whereas the PPP is based off of payroll. Revenue is larger than payroll. So, but hopefully this opens up pretty quickly, and a lot of business owners can decide what to do, because the PPP clock is ticking, and that's not a good thing. So,
yeah, and I included this website in the handouts as well, just to let everybody know.
Awesome. Great. All right, and just to touch on some individual provisions, there's not a whole lot, but here they are. So everyone probably received their direct payments by now. I know a ton of my clients have already, almost all of them. The reason I put this up on the slide is I just wanted you all to know that if it turns out that you should have received more based on your 2020 tax return, you're going to get that credit on your 2020 return. These not credits, these payments were based on 2019 income. Okay. So if you got a payment based on your 2019 income, and you should have received more based on your 2020 return, all right, you're going to get that on your 2020 return. If you receive payments on based on your 2019 return, and you got more than you should have, which your 2020 return will tell you that information, you get to keep that money. I'm not going to ask for it back. You don't have to pay the credit back. So either way, you win. So for a family of four, it's a few $1,000s. It's a lot of money. Helps. So in either scenario, we all win, and we get to keep the extra money that the government paid us. And then there's a provision in there that basically the Fed extended unemployment subsidies for $300 a week per week through March 14th. That was set to expire, I believe, at the end of December. So they basically extended that out. And as with the provision over the summer, or the spring, I should say, most individuals that are self-employed and gig workers, as they call them, they will qualify. So if for whatever reason your state requires you to reapply for employment, please don't forget to do so. You don't want to lose out on that benefit.
Yeah. And with this, you think it'll just be like a checkbox on there, or how do you think on a tax return people will be able to verify this? Like, for example, I had a child this year, mid-year, and I didn't get because 2019 I didn't have, my baby wasn't born, so I didn't get anything for the children.
Right.
So I guess it would just be a checkbox or something. What are your thoughts on that?
Yeah. Well, congrats, Nathan.
Thank you. I didn't mean to humble brag, I guess.
No. It's always, we could always hear some good news nowadays. That's always good to hear. So congrats to you guys. And for your question, yeah, I imagine there's going to be a form. You know, most credits like this, there's either a form or a statement or a line item on the 1040 that provides for this calculation. So what I see happening is they'll provide a separate schedule, and they're going to basically say, look, you know, based on your 2020 return, you know, there's you, your spouse, and a new dependent, right? One dependent. So that form will calculate your credit, and then there'll be a line item, I would assume, that would say, you know, 17 advance credit received, and then you'll just basically receive the difference as a refundable credit on your 2020 1040. That's what I see.
That's what I'm thinking too.
Yeah.
All right. Well, thank you for answering my question, but we need to get to other people's questions for sure.
Absolutely. And we're doing well on time, so I think we're going to
I need to go ahead and launch the poll question, but I'll let you kind of just continue on why the poll's launched.
Yeah, and this is a good
poll question.
Yeah, this is a good slide to do it on because this is a pretty short listing here. The other items I wanted to highlight was just basically 100% deduction for business meals and expenses for 2021 and 2022. So what they're basically telling you is, hey, look, we're encouraging you guys to go out, spend money, go out to restaurants. Now, this does not include, it doesn't include entertainment. Just make note of that. So, you know, if you're taking a client, that no one's going to ball games or anything like that right now, but well, I guess in select parts of the country, excuse me. But if you are doing that, the entertainment is still subject to the same rules. The meal portion of that excursion, you know, that's 100% deductible if you're providing meals for your employees on site. You know, because you don't want them to have to go out to lunch and, you know, be in contact with other people or whatever. You're ordering in, that's 100% deductible. Client meals are 100% deductible. So that's a nice gesture there, a nice provision. And then charitable contributions for non-itemized filers. You know, the charitable contribution has always been an itemized filer deduction. They increased this to $600 for married taxpayers, and it's extended to 2021. And that's an above-the-line deduction, so you don't need to itemize to get that deduction.
Good, thank you for that, Sal. And before we get to the Q&A, I did notice on the polling question, so my poll question was, do you have to show a 25% reduction in revenue if this is your first PPP loan? And I guess I should have been more specific on what PPP loan I was talking about. But if you're applying for the first time and it's a PPP round 2, you do have to show a 25% reduction, correct?
Correct. If this is your second round loan, you do have to show a 25% reduction.
Even if it's your first time applying for the PPP loan, right?
Well, if you receive the first round loan, then this would be your second round loan. If you're applying for the first time ever during this second round, that's considered a first round loan.
Okay. Cool.
Yeah. One of the first questions on the application is they ask you, did you receive a PPP loan previously? And that's the first thing. And then once you answer yes to that, then the next question will be, all right, did you experience a 25% reduction in revenue?
Okay. Yeah, that makes sense. Okay.
Yeah. But if you answer no to that question, you've never previously received a PPP loan, then you don't have to satisfy that requirement.
Yeah.
Yeah.
Awesome. So let's go ahead and start jumping into Q&A. And if you want to go ahead and go to the questions tab, and
absolutely,
I'll try to project anyone you start reading.
Sure. So I'm going to go from the top. I'm going to go with Donald Ford first.
Okay.
Donald asked, let's see, what if you were Schedule C for the first PPP, but received S-Corp approval for tax filings started 2019? I haven't filed 2019. I'm planning to apply. Oh, question just moved. Sorry.
It's on it should be on your screen. If it's not, then it's just asking, what if you were Schedule C for the first PPP, but received S-Corp approval for tax filing starting 2019? And he says, I haven't filed 2019 yet. I'm planning to apply for the second PPP.
Got it. Okay. Yeah, so these PPP loans are tracked by tax ID number. So if you applied under the first round under that tax ID number, and that tax ID number is going to appear on your S-Corp return, it's still the same entity. It's still the same legal entity. I'm assuming you were probably an LLC, a single member LLC prior to this when you applied for your first round, and now you're electing S status. Your process is no different than anyone else's process if you were an S corp the whole time. I hope that answers the question, and if it doesn't, please feel free to reach out to me. We can have a conversation about that. So the next question, and maybe I should go in reverse order here. Yeah, this is okay. I got the oldest one at the top. So I got a question. There's an affiliate rule, I believe, for second PPP loan. Shareholder of a C corp, 500 employees. Yeah, that's true. There is an affiliated. It's kind of like a controlled group rule with the IRS. If there's common ownership, you just got to watch out on the employee requirement. That's a technical issue. Most people that are applying for these PPP loans that I've spoken to or I've come into contact with, they're not coming anywhere near close to those employee limitations. So I mean, 500 employees, 300 employees, and with these rules, these thresholds, we're talking about large organizations. So, but do watch out for common ownerships and control groups there. Margaret asks about for nonprofits using the new revenue recognition rules. Yes. Oh boy. Yeah. Our auditing department loves that rule. Loves that new revenue recognition rule. It was all the chatter from 2 years ago. Do we compare restricted revenue as recognized based on spending, or the full amount of contribution dollars received? To be honest, this is a financial statement question. This is outside of my my expertise. I'm a tax guy, so not a financial statement guy, so I wouldn't be able to really answer this question. But feel free to email me the same question after today's session, and I can forward it on to our senior manager who's in charge of our audits and financial statements, and we might be able to help you clarify that. Next, Marilyn asks, our PPP loan was supposed to start repayments in November 2020. We are filing for forgiveness, but haven't gotten it yet. We still need to make the monthly payments. I would tell you no. I would tell you hold off on the payments. I would contact the lender just to make them aware that you're in the process of filing forgiveness. I take that to mean that maybe your application was already submitted. So I would just communicate with your lender to let them know your intentions, that you're holding off on paying it back because you expect to get full forgiveness. Just keep in mind with the ERC credit, like we mentioned in today's seminar, that you don't want to make sure you're not over using the payroll costs. So again, just let them know your intentions. You expect to be fully forgiven, and you should be in good shape. Okay. Yasmin asks, can you explain the difference between the less than 100 employees and more than 100 employee eligible wages for 2020? I'm assuming that means dollar level, I think. Basically what that means is that if it is about the dollar level, because I don't remember 100 employee threshold rule with any of these loan programs. So if you are paying an employee above $100,000 a year, that just basically means your wages that are used for the basis of the loan, for that employee, it's capped at $100,000. And obviously, if you pay them less than $100,000, you just use the actual salary costs. And again, I hope that answers the question. If not, please feel free to reach out. Just going to hit all these. Sylvia asked, do you have to have a 20% reduction in GR for first quarter, second quarter 2021 compared to same in 20? So 2021 is not the quarter to measure. It's going to be 2020. And you do, if we're talking about the PPP 2.0, round two, I should say, you have to show a 25% reduction in revenue between, let's say, the first quarter of 2020 versus the first quarter of 2019. It can't be the first quarter of 2020 versus the fourth quarter of 2019. It's got to be the same quarter. They're looking for consistent measurement of that reduction. So again, it's first quarter to first quarter, second to second, and you can pick any one. You don't have to show a reduction every quarter. So Kenneth asked about amending a 941, and can you claim the entire 10,000 credit per employee for 2020? So first of all, so the wages are capped at 10,000. The credit is for 50% of the wages for 2020. So that would be a $5,000 credit for every employee. And you would have to amend each 941. So if you're claiming that credit for the fourth quarter of 2020, you got to go back and amend the fourth quarter 2020 941, claim the $5,000 credit for that one employee then. And if you have more employees, you claim the credit for more employees. And then if you're going to do the same thing for the third quarter 2020, you take the same path. You amend that third quarter 941.
Yeah, we have a few more minutes, Sal, so let's just try to get through as many of these as we can, and I'll let y'all kind of do some closing messages. All right?
Yeah, absolutely. Let me see if I could pick one that applies to a lot of people. Oh, here's a good one. So Sarah Jane asks, if you're a sole proprietor and an independent contractor in a different industry, can you apply for PPP separately for each industry? In that situation, you can't, because you would be applying as an individual under, I'm assuming, through a social security number, and that would encompass all your self-employment income. Unless, of course, you have employees as operating in either business. So multi-business independent contractors, you just need to know that if you're applying, again, as a self-employed individual, it's all of your self-employment income. I hope that answers your question. If not, feel free to reach out. And yeah, okay, just one last one. Ruben asked, can you clarify if the previous PPP loan is forgiven? Does that apply tax? So if you have your loan forgiven, it's not a taxable event. The PPP loans, whether it's the first round or the second round, if you get your loan forgiven, it is not a taxable event. It's not taxable income to you. So I think I'm going to stop right there with the questions, and we can wrap up, Nathan.
Okay, awesome. Thanks, Sal. I appreciate that. And thanks for kind of getting to as many of these as possible.
Sure.
And I need to launch the last polling question. This is just simply asking if you would like Presti Naegele to reach out to y'all for further guidance, or you can shoot some questions to them about anything Zoho related or PPP related. Do you know how many clients y'all have helped with PPP? I'm sure that's an absurd question to ask, but
no,
sure.
not at all. I love saying the number, hundreds.
Yeah.
Each one of us, partners and managers, one of my partners has helped over 150 self-employed individuals that only file Schedule Cs. So I mean, firm-wide, we may have done 400 or 500 applications, if I had to guess. It's huge.
Yeah, it's awesome. And y'all have basically can cover every industry, because you focus on a certain industry, some other partners focus on the other industry. So y'all can pretty much cover anything out there.
Yeah, we all have small focuses and specializations.
Expertises for sure.
Yeah, definitely. But we're all capable of getting on the phone with a client and or prospective business owner, client, whatever, and basically just fielding that, getting a little bit of information about them and their business, and being able to provide them with some guidance. If you're doing your own PP application, certainly by all means, if you have a question or two, please reach out to us. If you've had it with the application process and you want to unload it, give us a call and we'll let you know, our process and how we get things done.
Yeah, and here's Sal's contact information up there. He actually gives you your cell phone, so you can reach him directly, and also Josh as well. If you have any Zoho specific questions, he can help you too. And now that we're at the top of the hour, and it looks like, yes, and so whenever the session ends, the evaluation will pop up on your screen, so do not close out of the Showtime app. And like I mentioned earlier, if you need to receive a CPE credit, you need to answer that evaluation. And if you would just like to answer that anyways, it helps us improve these sessions and get on better partners and better topics for the future. And I appreciate, Sal, everything you put together. It was really, really helpful. And like I mentioned, a lot of people aren't talking about that ERC, and I think you really opened up some people's eyes today about that.
Yeah, my pleasure to be on. And yeah, anyone who has any questions after the fact, please reach out. It's tax season. We'd love to speak to you and talk about your tax returns and your situations. And if we can help get to a better place, that would be great.
All right. Thanks, Sal. And thanks, Josh, for jumping on the call. I appreciate it. And thanks, everybody, for joining. It was awesome. It was a good time. Have a good day.